Chalo, next one guys, risk regulation in banking industry, unit number 13. So it is all about your Basel norms and the three pillars of Basel that is minimum capital requirements, and we have the second one is your supervisory review process and market discipline. So they generally comes under this particular one. Rukmini ma'am, you got your answer for that one? Yes or no? If you have any doubt, please do let me know. I'll try to explain that one also. So if we come to this particular one, we have Basel I, we have 1996 amendments. This is very important, where we generally included the market risk in Basel I. Okay? So earlier, okay, market risk was not part of the Basel I, but with the amendments of 1996, we included that particular. Basel Accord 2 आपका. Then we have capital charge for credit risk, capital charge for market risk and operational risk. Pillar 3 आपका supervise. Pillar 1, where is pillar 1? It should be here only. So we have pillar 3 आपका market discipline, capital conversion buffers, leverage ratio, counter cyclical buffers, systematically important financial institutions, and risk-based supervision of RBI. So these are the areas which are generally part of this particular one. Okay? So regulation of banking industries, necessities and goal. Please quickly go through this one. Then, so basically when it comes to the banking risk or the risk regulation requirements, I hope you guys are aware about the Hersted risk. Hersted risk was something linked with the there was one bank from the Frankfurt, Germany that got liquidated before the making of settlement, forex settlements and all. Okay, we discussed this particular one. Then we raised this particular concern in the front of BIS, Bank for International Settlement. They form a committee to study these kind of challenges in the future also, so we can have some sort of proper guidelines and all. So then BIS, they form a permanent 5 committees. That 5 committees are jointly known as BCBS, Basel Committee on Banking Supervision, and on timely basis they generally release some sort of guidelines. So bank, they can work on those particular areas or according to those particular guidelines. Basically these guidelines are toward the regulatory bodies, and regulatory bodies with some modification they implement in their economies itself, right? Like let's say Basel I, where we have CAR, capital adequacy ratio of 8%. Initially, with the recommendation of Narsimham committee, we implemented it as a 8%. But with the recommendation of Basel II, Narsimham committee too in 1998, we increase it from 8% to 9%. For global bank, it is suggested by the BCBS they should maintain at 8%, but we are maintaining at 9%. With our Indian banking structure and all. Even with similar things, we have so many guidelines under this particular one, right? So it is overall to provide the strength to the financial system. If any contingency or any stressful situation occurs, so our bank, they can handle those particular things or those particular scenarios. So they have suggested so many things like leverage ratio, counter cyclical buffers, LCR, NSFR. So these are the recommendations of Basel committee. हाँ बिल्कुल अजीत sir, हाँ. So that was a time zone issue and all. Okay. So that is something related to this. So these are the areas आपका, like improving the safety of banking industry by imposing capital requirement in line with bank risk, leveling the competitive playing fields of the bank through setting common benchmark for all players, promoting sound business and supervisory practices, controlling and monitoring systematic risk, protection and protecting interest of depositors, as the depositors cannot impose a real market discipline on the bank itself. Systemic risk, I hope everybody knows. So other things are very common here. Systemic risk is basically when a failure of one bank lead to failure of multiple banks. So that is generally known as systemic bank, and we experience this particular events with the global financial crisis 2007-8, when Lehman Brothers Bank, who generally got defaulted, and that default lead to so many other banks of US and insurance companies, and then it spread across the world. That spread is generally known as contagion effect, right? So that is something which is related to this one. So it is defined here also. So systemic risk is a risk of failure of whole banking system. An individual bank failure is one of the major source of the systemic risk. This happened because of high relation that exists on a ongoing basis between a bank through mutual lending and borrowing sum and the other commitments. Okay? So as we face in the Lehman Brother case itself, okay? Due to that property bubble things and all. So once that bubble burst, so the most of the asset they start becoming non-performing asset. So Lehman Brother banks, it got defaulted, and Lehman Brother Bank was one of the largest bank in US that time. So once that bank got collapsed, so जो छोटे छोटे banks थे सारे collapse होना start हुआ insurance companies, and it make a huge impact on the US economy as well as in the world economy. Okay? On the world economy. So now the outcome of this particular event was systematically important banks, and in case of India we have D-SIB concept, domestic systematically important bank, where we have three banks. Okay? These three banks we all know: SBI, ICICI and SDFC, and there are some provisions and there are some case studies around that particular one which get asked in your previous examination also, right? So these were the four committees आपका, ठीक है, five committees which was founded by BCBS आपका, ठीक है, or BIS. So basically 1974 a number of banks they released DOS-Mark to Bank Hersted in Frankfurt, Germany, exchange for the dollars payments that were to be delivered in New York. Due to differences in time zone, that there was a lag in dollar payments to counterparty banks during the Bank Hersted was liquidated by the German regulators. देखो जितने टाइम में इसको उनको पेमेंट करना था, टाइम जोन हॉरिजन का डिफरेंसेस था, और जब आपको उनको एक्चुअली पेमेंट रिसीव होनी थी उससे पहले वो बैंक आपका लिक्विडेट कर दिया गया, किसके द्वारा? वहां के जो रेगुलेटर है उनके द्वारा, ठीक है. So this issue was raised, and to solve these kind of issues, we approaches BIS, Bank for International Settlement, and they created one committees आपका Policy Development Committee, Supervision and Implementation Group, आपका Basel Consultative Group, Microprudential Supervision Groups, and Accounting Experts Group. And they have so many task forces and subgroup also. They generally work on different areas. 1988 Basel I came. 1988, the Basel Committee on Banking Supervision introduced the capital measurement system called Basel I Accords, also known as Basel I. Okay? So it focused almost entirely on credit risk, defining the capital and structure of risk weight for the bank itself. The minimum capital requirement was fixed at 8% of the risk weight asset, right? India adopted Basel I in 1999. In India, however, the bank are required to maintain capital to risk weight assets CRAR at 9% on an ongoing basis. Okay? This was the recommendations of your Basel II committee. Sorry, Narsimham II committee, right? So this portion is very important. This get asked so many times. Okay? So 1996 amendments in Basel I itself. So 1996 market risk amendments introduce an explicit capital cuisine for the market risk to which banks are exposed because of their trading in equities, debt securities, forex, commodities, options, etc. Allow bank to use their internal rating model to ensure their market risk also. Okay? So with this amendment, we generally included, there was an inclusion of market risk in Basel I. Earlier, it was entirely focused around the credit risk or the management of CAR against the risk weight asset. But with 1996 amendment, we included market risk as well. So market risk आपका in 1996, BCBS published an amendments to 1988 Accords to provide an explicit capital cuisine for the price risk to which banks are exposed, particularly those arising from the trading activities. This amendment was brought into effective from 1998. So it got implemented in 1996 and amended in 1996 and implemented in 1998. Silent feature of the amendments are given below, and these are very important. Okay? So you have to, I'll mention homework here. Okay? Please go through these particular one and you will definitely get these areas. If you got any doubt, so you can share with me. But this is very important. हाँ, थोड़ा सा इसको ध्यान रखिएगा. Please do not ignore this particular one. ठीक है? So it is all about the inclusion of your market risk and all. Okay? And if you study this particular one, you'll easily get these. Chalo, now Basel II आपका ठीक है. So it Basel II which include accord system ठीक है, pillar system basically ठीक है. We have 3 pillars आपका. Minimum capital, actually we are going to discuss all these pillars with your final unit, because in final units it is all about these 3 units only ठीक है, these 3 pillars only, right? So minimum capital requirement, supervisory review process and market discipline. So basically Basel II was a refined and reformed way of Basel I itself. Okay? So in Basel I we have only this part, that is capital requirements, CAR we introduced, and we introduced the market risk and all. But here along with that capital requirements, we also come up with 2 new things. One is supervisory review process, where we have 4 principles. These 4 principles are very, very important. They get asked so many times. And market discipline, we have so many disclosure norms. Okay? So these disclosures basically they are from the BCBS, and accordingly from we have RBI also. So they are generally part of this particular one, right? So okay. So minimum capital requirements. This portion is again very important. So capital base, which is a combination of tier 1, tier 2 and tier 3 capital. Tier 1 is our core capital. Tier 2 and tier 3 are basically assisting capital. The combination of all 3 capital is generally known as capital base. The sum of 1, 2, 3 elements will be eligible for inclusion in capital base, subject to now your tier 2 and tier 3 will be decided on the basis of tier 1 capital, that is your core capital. So total of tier 2 supplementary elements will be limited to maximum 100% of your tier 1 elements. Okay? So let's say if your tier 1 capital is 100 crore, so your tier 2 capital can be maximum आपका 100 crore rupees. Okay? Subordinated debt will be limited to a maximum of 50% of tier 1 capital elements. Because subordinated debt means secondary debt. Okay? So which gets secondary preference at the time of liquidation. So it can be maximum 50% of your tier 1 capital. Tier 3 capital will be limited to 250% of bank tier 1 capital is required to support market risk. So this is something is this, where general provision, general loan losses reserve include amounts reflecting lower valuation, assets valuation reserve, which take the form of latent gain or latent gain on unrealized securities will be subject to a discount of 55%. So these are some rules aapka around which accordingly bank they have to maintain their capital base, and these guidelines are important. ठीक है, तो थोड़ा सा इनको याद रखिएगा even during solving the case studies as well as आपका straightforward questions, they'll be helping you in different ways. So supervisory review process, the selection discussion, supervisory review process, one was capital gain. So when it comes to the supervisory review, it is basically the responsibility belongs to 2 areas. One is bank itself. They have to meet with the minimum requirements which are generally provided by the home regulators. In case of India, it is RBI. So like let's say we have to maintain CRAR of 9%, or the additional the requirements, the regulatory guidelines and all. So if a bank is not fulfilling those particular areas, so supervisor they need to take early action. So that is suggested in this Basel II paper aapka. So where we have 4 principles, and these 4 principles are very important one, right? So these are the 4 principles, and these are very important, guys. Principle 1, which is related to bank itself. Bank should have a process for assessing their overall capital adequacy in relation with the risk profile and strategy for the maintaining their capital levels. Second principle toward the supervisors. Supervisors should review and evaluate bank internal capital adequacy assessment and strategies, as well as their ability to monitor and ensure their compliances with regulatory capital ratios. Supervisors should take appropriate supervisory action if they are not satisfied with the result of the process itself. Principle 3, supervisors should expect bank to operate above the minimum regulatory capital requirement. Let's say if CR is 9%, so they should at least maintain that 9% or above than that, and should have the ability to require banks to hold a capital in excess of the minimum. So the final one, आपका fourth one, supervisor should seek intervenes at the early stage to prevent capital from falling below the minimum level required to support risk characteristics of the particular bank, and should require rapid remedial action if capital is not maintained or restored. Okay? If any bank is falling below those particular level, so they should take early remedial action, so we can protect that particular bank and we can solve the issues and all. ठीक है, तो अगर आप लोग नहीं देखोगे तो कहीं ना कहीं आपका there will be a problem in the long term itself. So these are the 4 principles under your supervisory review process, okay, which were provided by BCBS and they get asked so many times. Okay, so module B के अंदर what you'll experience, there are lots of BCBS guidelines. Okay, for operational risk we have 11 principle. For liquidity risk after this global financial crisis, there are 13 principles. Okay, and they get asked so many times. So please go through these areas specifically. Basel आपका pillar 3. Pillar 3 is basically it is Basel III, which is basically reformed and refined way of Basel II itself. Same things, but we have mentioned enhanced, nothing else. So that is the one. So we generally providing with BCBS that generally try to provide more strength to the financial system and all, right? So RBI issue guidelines based on the Basel III reforms on capital regulation in May 2012, and we start implementing these particular one from April 1st 2013 itself. Okay. Improve the banking sector's ability to observe ups and downs arising from the financial and economic instability, improve risk management ability and governance of banking sector, strengthen bank transparency and disclosures. So these were some key objectives of the Basel III itself. Okay? So so these are the areas. Better capital, basically these were the key initiatives under the your Basel III. So first one is better capital quality. Okay? So better capital quality. One of the key element of Basel III is to introduction of much stricter definition of capital. Better quality capital means high loss observing capacity. So this term will mean that bank will be stronger, allowing them to better withstand period of the stress. Okay? So like we introduce LCR for ultra short term period of 30 days, NSFR up to 1 years, or we come up with the counter cyclical buffers or आपका leverage ratios and all. So they get managed through these particular one. Okay? So we can have bank can have strong capital if there is any stressful situations, so we can handle that particular situation, right? Capital under this one we have capital conversion buffers 2.5%. Another key feature of Basel III that now bank will required to hold a capital conversion buffer of 2%, 2.5%. That aim asking to build conservation buffers is to ensure bank maintain a cushion of capital that can be used to absorb losses during period of financial and economic stress. Okay? So this is something आपका one additional layer. Okay? Let's say how you'll understand this one. So earlier your let's say in case of India it was 9%. Again, this is the core capital which we are maintaining against the risk weight asset. Now what we did, we put one additional layer, okay, with additional layer of 2.5%. Okay. Now if anything happen in with Indian economy, so अगर कुछ भी ऐसा stressful situation होता है, so what will happen? First it will get breached. Okay. So first it will get breached आपका. So this portion, okay, this is kind of a center. We are providing one additional layer of security with आपका your capital conversion buffers आपका, ठीक है? So that is CCB. So if anything stressful situation will happen, so first it will get breeze. So we'll get more time to deal with that particular situation, and time is very important during any stressful areas. So before this also, we have your LCR आपका bank wise. This is something economy wise to deal with the economy wise situation or the broader stressful situation in the economy. Bank wide also we have LCR, NSFR and all. We have to maintain those particular one greater than equal to 100%, and we all bank are maintaining those particular things. So that is something we are adding some additional layer so we can have strong capital quality. So capital conservation buffers CCB. Then we have minimum common equity CET one capital requirements. This is also again very important. Yeah. So minimum common equity and tier 1 capital requirements. The minimum requirement for common equity, the highest form of loss observing capital, because we do not have to pay any interest and all, has been raised under Basel III from 2% to 4.5% of the total risk weighted asset. The overall tier 1 capital requirements consisting of not only common equity but also qualifying financial instrument will also increase from the current minimum 4 to 6%. Okay, so we are adding some additional or secure capital for the banks so we can survive in a stressful situation. Leverage ratio is another one. So a review of financial crisis 2008 has indicate that value of many assets fell quicker than assumed from historical experiences. So this bank now Basel III rules include a leverage ratio to serve as a safety net. This aim to put a cap on swelling leverage in the banking sectors on the global basis. 3% leverage ratio of tier 1 will be tested before mandatory leverage ratios introduced in 2018. Liquidity ratios, so where we have LCR and where we have NSFR, okay? They also get implemented in the banking system itself, right? So LCR, liquidity coverage ratio for ultra short term आपका requirement, liquidity requirements, and this is something where with this particular ratio what we are generally doing are available source of fund of आपका fundings and required source of fundings आपका कि let's that borrowings and lending, so we can have at least 1 year's periods. This generally applicable for the 1 year. So these are the liabilities and these are the stable source of fundings through which we are going to pay off those particular liabilities, and this is something within a span period of 30 days. If anything happened in the economy or with that particular bank, we should have at least 30 days obligations at a time with us in the form of high quality liquid assets. So if it is required, we can easily liquidate them and we can pay off those particular liabilities, and it is assumed that within 30 days of period we can come up with some solid solutions and all. Okay? So when it comes to the LCR, it is net stable value of high quality liquid asset, unencumbered high quality liquid asset divided by total cash outflow in 30 calendar days into 100, and your ratio should be greater than equal to 100%, and every bank they are maintaining this one. When it comes to the NSFR, okay, this is आपका NSFR, okay, a net stable funding ratio, available stable fundings divided by required stable fundings. Again, your ratio should be greater than equal to 100%. Okay, so try to remember these formulas also, they'll definitely help you, right? Next one. So available funding and आपका required funding. So available funding means आपका, ठीक है? So basically when it comes to the available funding, so we have payment accounts, saving accounts, आपका other debts and all, ठीक है? Required आपका loan, other assets, reserves and assets, they generally comes under the portion. Okay, we'll discuss this particular one in detail in our last unit itself. We have what comes under and their average आपका which bank need to maintain. So that is, there is a chart, we'll go through that particular chart. So LCR is generally for 30 days, it is up to 12 months. It is liquidity requirement, it is funding requirements. Liquid assets आपका both liquid and non-liquid assets can be part of that particular one. Correct है? चलो. So D-SIB आपका, we have domestic systematically important bank, or with this after this global financial crisis and all, we come up with the solutions that is called internationally domestic financial systematically important banks आपका, ठीक है? And we have this structure and this get asked so many times. Okay, last year also there was a case study around this bucket size आपका. ठीक है, we have 5 buckets and we have 3 banks from India. They generally categorize as D-SIB by RBI. ठीक है, these are ICICI, SDFC and State Bank of India. From April 1st 2025 onwards, earlier SDFC was part of this one itself, but now it got shifted to bucket 2 आपका, right? So basically the concept of D-SIB is, or your systematically important banks is, these are too big to fall. ठीक है, so that is the term which we use. कि जैसे we faced with the Lehman Brother banks, it got defaulted, तो उसकी वजह से other like small banks, they have dependency on bigger banks. ठीक है, so if your bigger banks is getting defaulted, that means there will be some sort of a ripple effect in the banking system, and that will collapse your entire banking system. So to prevent these bigger banks, we what BCBS suggested, they says कि we should, these banks, they should maintain some additional capital आपका. ठीक है, and this additional capital is this, right? So they have, apart from the normal guidelines, they have to maintain this additional capital against their risk weight asset. Like let's say State Bank of India, that generally comes under bucket 4, and they have to maintain 0.80% of additional risk weight assets apart from the normal banks. Okay? So the higher D-SIB surcharge for SBI and SDFC will be applicable from 1st April 2025. Hence, up to March 31st 2025, D-SIB surcharge applicable to SBI and SDFC is 0.60%. Again, but now it is आपका 0.80% for SBI, and for SDFC 0.40, and the other one also. So please, earlier SDFC was part of this one. Okay? Earlier, now see, you have to be very careful in this particular case, because when they'll ask case study, if they mention for the year 2025-26, that means you have to apply the data which is given in this particular chart. For SBI, you have to apply 0.80 additional आपका, and for SDFC 0.40, and for ICICI 0.20. But if they ask you for the previous financial year 24-25, so in that case SDFC and ICICI at 0.20 and SBI was at 0.60. ठीक है, तो प्लीज इसको भी थोड़ा सा आप लोगों को याद रखना है. ठीक है दोस्तों, so this is like what, by this way, what BCBS is trying to do, they generally want to try, they generally want to protect these bigger banks because they are too big to fall, right? So that is the logic behind this one. I guess people are, there is no fear about BFM. ठीक है, people are only asking for HRM or आपका BRBL. In group itself, they are like, there is no one is caring about BFM. What happened, guys? Everything is good with BFM. It's one of the tricky paper. You'll see the things in the concept areas and all. Okay? So what I can recommend, till this week you can work on the your HRM things if you want, if you wish, if you have done one set of practice with this BFM subject. If not, you should give more attention to this subject because this is very dangerous. Sometimes it becomes very dangerous. So chalo. So now this is the final table. Final table means as of now, bank they have to maintain their capital in this way, like 11.50%, 9% plus CCB of 2.5%. So the overall आपका 9%, and if you add this CCB, so it is आपका 11.50%. In case of SBI, आपका plus 0.80%. In case of SDFC, plus 0.40%. Plus 0.40%. So for SDFC plus 0.40, SBI आपका, thus they have to maintain additional capital buffers for this one. Correct है? चलो, we'll move forward, guys. Capital charge for capital charge for credit risk. Now this is again very important one, where you have to calculate the risk weight asset. Okay, while we do the case studies, there will be number of case studies around this particular one. Capital charge for credit risk, market risk, and operational risk. In all the areas, we'll see the case studies. This is the fundamental part. So under the standardized approach, the rating standardized approach, which we generally use to calculate the credit risk, rating assigned by the eligible external credit rating agencies will largely support the measure of the credit risk. RBI has identified there are number of credit rating agencies आपका, ठीक है, bank may rely upon these rating as assigned by the external credit rating agencies chosen by the RBI for assigning risk weight for capital adequacy purpose as per the mapping of furnished in the RBI guidelines also. Okay? Like we have number of credit rating agencies and all. Okay? So as a bank, we can use their ratings also, and we can use their ratings to map the overall credit risk as well, right? So the circular issued by RBI had laid down detailed guidelines on the capital adequacy requirements and the risk weight to the applied in case of the following cases. Okay? So risk weight to be applied in the following cases. Like these are the areas like claim on domestic sovereigns, claim on foreign sovereigns, means आपका any debt which is issued, any bond which is issued by government of India, if you have holding to that, or any bonds which is issued by the foreign governments, if you had holding on those particular one, or if you have created some asset with this, let's say if you have given loan to government of India, that means if you are purchasing bonds of government of India, that means you are giving loan to government of India. So what will be the capital charge for that particular one and all? Claim for on public sector enterprises, claim on multilateral development banks like IMF, World Banks and all. Claim on banks, claim on primary dealers, claim on corporate asset finance companies and non-banking finance companies, infrastructure finance companies, claim included in the regulatory retail portfolios and all. So apart from this, we have claim secured by residential property, claim classified as commercial real estate exposures, non-performing asset, specified categories, venture capital, other asset like loan and advances to bank, own staff, off balance sheet items, securitization exposures, capital adequacy requirements for risk credit defaults to have position in the banking. So there is a like basically while you create the capital charge means that mitigation amounts. Okay? So let's say if you are dealing with this kind of assets, so what should be the capital, what is the risk involved in that particular one? Accordingly, or in the proportion of risk itself, we have to maintain some additional buffer. That additional buffer is your capital charge itself. So that generally comes under this particular one. Eligible credit rating agencies. So there are some rating agencies which are generally allowed by RBI. This is the list. Okay? So basically we have these domestic, आपका Breakwood Rating Agency, Credit Analysis and Research Limited, CRISIL, ICRA, आपका India Rating Research Private Limited, SMERA Ratings, आपका we have Informatics Valuation and Rating Private Limited. Apart from this, RBI also have allowed these three international rating agencies. आपका one is Fitch, another one is Moody's, and the final one is Standard and Poor's. So banks, they can use their ratings also while they are giving loan to any customers, and even to verify the risk involved in that particular asset itself. Next one, guys, internal rating based approach. IRB. This is again very important one. This is basically bank level model. So this is the bank own model to assess the risk itself. So one of the most innovative aspect of new occurred is IRB approach to measurement of capital requirements for credit risk. IRB approach offered following two options. One is foundation IRB approach. Another one is advanced IRB approach. Since the approach is based on bank internal assessment, the potential for more risk sensitive capital requirement is substantial. So internal rating based approach, IRB approach, it is generally based on these elements. These are like default probability. So default probability of default, which means the likelihood that borrowers will default over a time horizon. Then we have loan given default, which measure the proportion of the exposure that will be lost in the default when that default occurred. So first one is probability of default. In what time horizon? Let's say we have created an asset for 10 years. There is a probability that at the end of 7 years, that customer can become आपका defaulter. That means 3 years. Then second, loss given default, which measure the proportion of the exposure that will be lost in the default. And during those 3 years, remaining 3 years, what amount we are going to lose. And exposure at the default, for the loan commitment measure, the amount of the facility that is likely to be drawn in the event of default, आपका which for the loan commitment measure, the overall आपका the, let's say if we are giving 1 crore rupees, so how much principal we might lose in that particular case. Maturity आपका which measure the remaining economic maturity of the exposure, let's say that 3 years in our case, like let's say if it is for 10 years, so 3 years that is maturity in that particular case. Again, with the help of case studies itself, there are case studies around this particular one, and that is very important one also. Okay? That get asked so many times, so we'll practice that area also. So, which of the following statement are correct regarding the regulation of banking industry and systemic risk? Regulation of banking industry and systemic risk, and you have to find out the correct statement. The primary reason for regulating banks is to ensure profit maximization and freedom in risk taking by financial institutions. Regulation guide bank in developing robust internal risk model methodologies and measure. Core goal of the regulation is to impose capital requirement aligned with the risk profile of a bank. Systemic risk arise primarily isolated from isolated bank failures that do not affect the broader financial network. One major challenge for the regulator is managing the contagion effect that can lead to system-wide failures in the banking sector. So what will be your right answer, guys? Yes, huh. Okay. So different answers. The primary reason for regulation is to ensure profit maximization. This is not the primary goal, first of all. Okay. When it comes to the risk management, regulation guide bank to develop robust internal risk control things. Core goal of regulation is impose capital requirements aligned with the risk profile of the bank. True. Systemic risk is not in, that is not something in isolation. It is something like that global financial crisis. We have interlinks of the banks, and due to those particular interlink, where we have dependency of small bank on bigger bank. तो जब बड़े बैंक्स आपके कोलैप्स होते हैं तो सबको ले डूबते हैं. ठीक है. One major challenge for the regulators is mapping the contagion effect. Contagion effect is basically that global financial crisis. ठीक है. That bank which got defaulted in US and it make impact आपका on the entire US economy and it is spread across the world. तो जब आपका कोई चीज कहीं पे प्रॉब्लम हो रही है, उस वो प्रॉब्लम आपका मल्टीपल एरियाज में स्प्रेड हो रही है, दैट इज जनरली नोन एज कॉन्टेजियन इफेक्ट इन इकोनॉमिक्स. ठीक है. तो ये दैट इज अ मेजर चैलेंज आपका इन द बैंकिंग. सो 235. So 235 means C will be right answer for this particular one. Correct? Yes, very good. Next one, guys. Next question on your screen. Please quickly go through the question. Risk-based regulation and Basel committee. Risk-based regulation and Basel committee. क्या होगा आंसर, guys? What will be your correct answer? In 1970s, strong regulation and limited competition in commercial banking reduced the incentive from the innovation and change. What we have to find out? Correct statement. Statement 1 seems correct. Deregulation promoted competition and globalization, but also led to increased systemic risk due to unprepared market participation. The Basel Committee was established in 1974, BCBS, under the BIS, Bank for International Settlement, BIS, following the Hersted bank failures. This statement is also correct. The Hersted incident involved a settlement risk due to time zone horizons between Frankfurt and New York. True. The Basel Committee on Banking Supervision is legally a part of BIS and is governed directly by the Basel Committee on Banking Supervision is legally, it is an advisory board. It is an advisory board, as I remember this one. So after 1 2 3 4 1 2 3 no 1 2 3, there is something issue with this particular options. Now anyone, people are saying 1 2 4 5, 5 is right. 1 2 3. Basel Committee was established in 1974 under the Bank of International Settlement. BCBS was formed in 1974 only, na? Any further date for this one? BCBS was आपका it is about a Basel committee ना, BCBS. Basel committee means आपका Basel Committee on Banking Supervision. BIS got established in 1930. ठीक है, BIS was established in 1930 and 1974 when there are number of banks who they generally mark आपका DOS mark against this Herstatt Bank from Germany, Frankfurt. Then we formed the committee called BCBS. There are some issues with this option also. ठीक है, हाँ ये options के साथ थोड़ा सा गड़बड़ है इसमें. We'll check this answer. हाँ ठीक है, ऑप्शन ए एक देख लेते हैं. ठीक है, फर्स्ट स्टेटमेंट इज राइट, 2 इज राइट. ठीक है, थर्ड वन इज इनकरेक्ट. BIS was established in 1930. No, BIS is established in 1930. Basel committee was formed in 19. हाँ, this is correct. See, the statement here also that is same. ठीक है, इसमें कोई change नहीं है आपका. This statement is also correct and this statement is also correct. ठीक है, तो we have to change the options. This is incorrect. BCBS is not a legally part of BIS. It is a kind of a, there are 5 core groups आपका. They generally help them to make the decisions and all. They are not formal part of that particular. They are kind of a advisory one. ठीक है, तो यहाँ पे मतलब this statement is also right. So 1 2 3 4. ठीक है, it should be आपका 1 2 3 and 4 आपका. ठीक है, इस तरीके से. ठीक है, so that is the one. Correct है. चलो आगे बढ़ते हैं. BCBS is 1974 only. ठीक है, and BIS 1930 आपका. That is one of the oldest financial institution in the world right now. And Herstatt risk was the area आपका जहाँ से we start like on the recommend after that Herstatt risk incident we form 5 group आपका. ठीक है, the 5 groups are core part of the BCBS, but BCBS is not legally form of the BIS. BIS is different one, right? So that is the game. It was mentioned 1974 only ना. हाँ 1974 is only, right? हाँ आलिया, yes, हाँ बिल्कुल. चलो आगे बढ़ते हैं. Next question guys, next question. Please quickly go through the question and answer. Consider the following statement regarding internal structure of BCBS. Now it is, it comes now. Okay. Internal structure of BCBS. So the Basel consultative groups and the macroprudential supervision group are part of the 5 permanent committee groups under BCBS. Yes, task forces under the BCBS committee groups are created for ongoing technical support. Again, true. Remain active permanently. No. All 5 committees groups report directly to BCBS chairman. True. So only statement incorrect is this. This statement is partially correct, that but the second line is wrong. ठीक है, तो जो हमारे आपका जो technical groups हैं, they are temporary in nature. ठीक है, जैसे let's say if BCBS have to study some new areas, तो उस area के जो expertise हैं उनको हम include करते हैं आपका in a task force. ठीक है, and once the motive is achieved, we dissolve those particular. They are not permanent part. Only 5 groups are the part of the permanent things and all. ठीक है, so not this guys. D will be not right answer for this one. ठीक है, those who mentioned D ना, D is not right answer for this one. 1 and 3 आपका. ठीक है, A should be right answer for this one. These two आपका, they are not permanent active. They are not active permanently. They are temporary groups आपका. So A should be right answer for this one. Task forces are established for a specific task and temporary in nature. So that is done. Please do remember this one. Chalo, next one. Okay. So a mid-sized Indian bank that is called Trinity Bank has expanded rapidly after deregulation and now has substantial international exposures. By 1991, the bank credit portfolio includes the following. So 1,000 crores in Government of India's bonds, 600 crores in interbank lending, top rated domestic banks, 900 crores unsecured retail loans, 300 crores mortgage backed housing loans, 400 crores in irrevocable performance guarantee issued on behalf of clients. Bank maintained capital flows, 220 crores paid up equity capital and disclosed a reserve, 50 crores general loan provision and 30 crores in subordinated debt instruments. As per the 1998 Basel I Accords, determine whether Trinity Bank complied with the minimum capital adequacy requirements and you have to find, like you have to go through these 5 statement and you have to find out the correct statement. These are your options. बताओ दोस्तों, प्यार से पढ़िए, आराम से, कोई जल्दीबाजी नहीं है, ठीक है. What will be your right answer for this one? And once you'll attempt that module B mock na, similar set of question you'll get there also. And I have given 2 or 30 minutes, 30 additional minutes, ठीक है. So बस you have उनको मतलब ना कंज्यूम करना है, ऐसा नहीं कि मतलब what I experience कि people they attempt 3-4 question and they left out, ठीक है. 3-4 क्वेश्चन में गिव अप कर दोगे तो कैसे चलेगा. So risk weight asset must be calculated by applying risk weight 0%, 20, 50, 100 depending on the nature of the corporate exposures. Okay. Irrevocable performance guarantee are off balance sheet items and must be converted to credit equivalents using appropriate credit conservant credit conversion factors before calculating risk weight asset. Subordinated debt qualify as part of the tier 1 capital under the Basel I norms. Tier 2 capital include general loan provisions and certain hybrid instruments subject to limit. Tier 2 capital 150%. As per the Basel I, minimum risk weight asset 8%, but RBI maintain 9% in Indian bank excluding CCPs. ठीक है. What will be your right answer? क्या है इसमें से करेक्ट आंसर, कौन सा है आपका? Okay, Santosh sir is saying option B and Pujisha ma'am is saying option A. Remaining guys, बाकी के लोग सो गए हैं. सोए तो नहीं है ना कोई अभी, ऐसा मत करना. एटलीस्ट ए भी आंसर करो कुछ भी, ठीक है. आसान क्वेश्चन है. इफ यू हैव गॉन थ्रू द गाइडलाइंस, ये सारे गाइडलाइंस मैंने आपको पढ़ाए हैं कॉन्सेप्ट में. अभी जो रिसेंट समरी है ना उसमें भी पढ़ाए हैं, डिटेल वाले में तो पढ़ाए हैं, ठीक है. सो बहुत आसान है क्वेश्चन. देखो, रिस्क वेट क्लासिफिकेशन, दिस इज ट्रू आपका, ठीक है. We do have this kind of classification as per the Basel I norms. Second one, irrevocable performance guarantee are part of off-balance sheet आपका, ठीक है. बिल्कुल 100% it is part of this one and must be converted into credit equivalents using appropriate credit conversion factors before calculating risk weightation. Subordinated debt आपका secondary debt which is not, आपका क्या कह रहा है, part of tier 1 capital. No, this is not part of tier 1 capital. It is part of tier 2 capital based on the Basel norms. ठीक है. It is part of tier 2 capital. Tier 2 capital include general loan provision and certain hybrid instruments subject to limits 100%, 150% of the total आपका रहेगा, ठीक है. As per the Basel 1 minimum capital requirement, this is 100% true. तो 1 2 4 5 ठीक है, मीन्स आपका ऑप्शन ए ओनली विल बी राइट आंसर फॉर दिस पर्टिकुलर वन, ठीक है. बी आपका कुछ लोगों ने बोला है, बी क्या कह रहा है, 1 3 4 5, नहीं, 2 इज ऑल्सो करेक्ट, 2 इज ऑल्सो irrevocable performance is part of that one. A should be right answer for this one. Yes, ठीक है. तो ए आपका द ओनली स्टेट सबऑर्डिनेटेड डेट क्वालिफाई अंडर टीयर 2 नॉट टीयर 1. टीयर 1 इंक्लूड आपका कोर कैपिटल, ठीक है. सबऑर्डिनेटेड मींस सेकेंडरी. व्हेन इट कम्स टू टीयर 1 कैपिटल, इट इज द कोर कैपिटल ऑफ द बैंक इटसेल्फ, ठीक है. चलो आगे बढ़ते हैं. नेक्स्ट वन, which of the following statement are correct regarding the Koch ratio and capital adequacy norms? Koch ratio is equal to capital adequacy ratio, ठीक है. बताओ दोस्तों क्या होगा आंसर, व्हाट विल बी योर राइट आंसर. वेरी इजी क्वेश्चन, बेसिक क्वेश्चन. कैपिटल एडिक्वेसी रेशियो और कोक रेशियो एंड कैपिटल एडिक्वेसी नॉर्म्स. बेसल 1 अकॉर्ड introduce a benchmark capital to risk weight asset ratio of 8% for international bank, while calculating Koch ratio only on off balance sheet items are considered to determine the total risk weight asset. In India, bank are required to maintain CRAR of 9%. ठीक है. What will be your right answer for this one? जल्दी से, इतना टाइम नहीं लगना चाहिए इसमें, ठीक है. Only आपका what will be your correct answer guys? What will be your right answer? ठीक है. First statement is right, third is right, this is wrong, ठीक है. It should be on and off balance both, ठीक है. On and off both, ठीक है. So on and off both आपका, this is wrong. So 1 and 3, B is the right answer for this particular question. Correct है, ठीक है. So B will be right answer for this one. Next one, Which of the following statement correctly pertain 1996 amendments, ठीक है, 1996 amendment to Basel Accords regarding market risk and related regulatory, very very important. Last year also there was one question around this one, ठीक है, बहुत बार ये पूछा जाता है. So earlier when we introduced Basel I 1988, market risk was not part of the entire frameworks, but in 1996 amendment we include and we provide some sort of guidelines also, and those guidelines are very very important one, and we have discussed all these particular one in detail. बताओ दोस्तों क्या होगा आंसर. In 1996 amendment to 1988, Basel Accord introduced capital requirement for market risk applicable from 1998. पहला statement. ये दूसरा, bank using internal model for market risk must compute value at risk using a 95% a 95 percentile to tailed confidence interval over a 10 day time horizon. Bank using proprietary VAR model must uphold capital equal to the higher of the previous day VAR and 3 times of the average of daily and over 60 business days. The Basel Committee on Banking Supervision has legal authority to enforce its standards across all members. All amendments allow the tier 3 capitals, short term, this. Okay, what will be your right answer, guys? Okay, people are saying option A. बाकी के लोग क्या कहते हैं आपका? ठीक है. So the 1990 statement 1 is 100% true. Bank use models market risk compare VAR at आपका 99%. ठीक है. So confidence level is 99% and this 2-day confidence over 10 days. This is 2-day confidence level is not required, I guess. ठीक है, this is wrong. Bank using proprietary VAR model must hold capital equal to the higher of the previous day VAR and 3 times of the average 60 days. ठीक है, true. Basel Committee on Banking Supervision has a legal authority to enforce. No, there is no legal authority. It is advice line. ठीक है. The amendment allow the tier 3 capital, which is 250% of your tier 1 capital, and that is used to this one. ठीक है. Tier 3 capital is basically आपका 250% of your tier 1 capital, core capital, and which is include these particular one to the to support the market risk. ठीक है. So 135 means option A will be right answer for this one. Very good, guys. Awesome. A आपका Krish, A will be right answer for this one. ठीक है. Next one, sorry, आपका it is one thing, 99 percentile, one tail a confidence 10 trading day, not this one. ठीक है. And this statement BCBS does not have legal enforcement power. It issue non-binding statements and all. ठीक है. Next one, which of the following statement correctly reflect the reason for revising the Basel I Accords and objectives of the Basel II? ठीक है, बताओ Basel II. Why we come up with the Basel II things? Basel I apply a uniform 100% risk weight to all corporate exposure regardless of their credit ratings. One encourage bank to prefer high risk asset due to identical capital requirement across different risk. Basel I effectively incorporate operational risk. Okay. One of the key goal of the Basel II was to ensure the capital adequacy norms did not relate to the unfair advantages. Basel I laid to the foundation of Basel II and III despite of lack of sensitivity to risk differentiation and all. What will be your right answer, guys? Anyone? So statement 1 is 100% correct, 2 is also correct, this is wrong. Okay. See, operational risk was not part of Basel III, Basel I, sorry. Okay. So one of the key goal of the Basel II was ensure the capital adequacy norms did not lead to unfair advantages among the international one. Basel I laid the foundation of Basel II and III, that is also 1, 2, 4, 5. 1, 2, 4, 5. 1, 2, 4, 5 means option D will be right answer for this particular one. Correct hai? Chalo, next one, guys. Next one. Which of the following statement about the Basel III frameworks and its implementations are correct? So Basel III and its implementations, what will be your right answer? Basel III and its implementations, and we have to find out the correct statement. So what will be your correct answer, guys? So Basel III frameworks introduce a capital conversion buffers that restrict payout if breaches to ensure minimum common equity requirements are met. Okay, so 100% true. There is no issue with this one. The LCR, liquidity coverage ratio, holding high quality liquid assets to cover आपका 30 days. This is wrong. ठीक है. The counter cyclical capital buffer is designed to limit bank participation during system wide credit booms to reduce losses during the burst. ठीक है. 100% true. It was counter cyclical buffer is something save more in your good days. ठीक है. और एट अ गुड टाइम. ठीक है. जब अच्छा बिजनेस चल रहा है तो आप ज़्यादा रिजर्व रखो, जिससे आप उसको जब कभी आपका गलत चीज़ें होती हैं, इकोनॉमिक डाउन टर्न चलते हैं या स्ट्रेसफुल सिचुएशन है, उसको आप बचा सको. एंड दिस वी लर्न फ्रॉम द नॉर्डिक नेशन बैंक, जहाँ पे जिनके ऊपर ग्लोबल फाइनेंशियल क्राइसिस का इम्पैक्ट नहीं आया. दिस वॉज द रीजन. Net stable funding ratio become a minimum liquidity standard effective from 2018, encouraging bank to maintain stable long-term funding sources. आपका ठीक है, correct है. There is no issue with this particular one also. ठीक है. The leverage ratio under Basel III consider high risk assets and off balance sheet exposure for its calculation. ठीक है. Consider high risk weight assets and off balance sheet. क्या होता है आपका leverage ratio, कैसे हम लोग कैलकुलेट करते हैं आपका. ठीक है. इट शुड बी आपका रिस्क बेस्ड टोटल एसेट, नॉट ओनली हाई रिस्क वेट. ठीक है. रिस्क वेट एसेट एंड risk based asset, आपका risk based total asset should be. Anyone who want to answer this one? Okay, people are saying option D. That means you are saying D is also correct. Yeah? So I just want to check this particular one. 1 3 4, do we have 1 3 4? C can be answer for this one. Yes. ठीक है. देखो, leverage ratio is calculated regardless of the risk weight based on the total asset. ठीक है. And off balance sheet total asset versus आपका your off balance sheet exposure, that is the one. ठीक है. And LCR is 3%. Next one, which of the following statement about the composition of regulatory requirements of bank capital under Basel III and guidelines? Please go through this particular one. Hello. So guys, what will be your right answer for this one? What will be your correct answer? Yes, option C. Some people are saying option C, some people are saying option B आपका. Okay, चलो quickly see this one. So minimum capital risk weight asset scheduled commercial bank is 9%, excluding the. Okay, it is about the RBI guidelines also. ठीक है. So this statement is true. First statement is true. ठीक है. Right. The common CD1, at least 5.5% of risk weight assets include credit, market and operational risk. This is also correct. State tier 3, tier 2 capital contribute a maximum 2% of toward the minimum CRAR required 9%. Additional tier 1 capital is allow up to 1.5% of risk weight assets within the tier 1 capital requirements. This is also correct here. The capital conversion buffers 2.5% of risk weight asset maintained separately and can be fulfilled by the tier 2 capital. ठीक है. So this statement आपका. ठीक है. CCB is not calculated. CCB is the leverage ratio we generally calculate on this आपका risk weight asset. ठीक है. Okay. So that means option 1, 2, 3, 4. 1, 2, 3, 4. C should be right answer this. Capital conversion buffer is 2.5% of the maintain on the CET1 to not 2 आपका. ठीक है. CET1 आपका. ठीक है. It should be on CET1, not on the CET2 itself आपका. ठीक है. That is the right explanation for this one. Next one. Next question guys. चलो next question. Next question. Please quickly go through the question and try to answer this one. Yes, yes, yes. CCB for leverage ratio, and this is for the tier 1, based on the tier 1 itself. They are not on tier 2. That is the one. Chalo, next question, guys. Next question. Which of the following statement about the RBI capital charge for credit risk? Okay? So capital charge for credit risk under the standardized and IRB approach. Okay? So internal risk based approach are correct. Capital charge for your credit risk. Capital charge for credit risk. This is a nice question. Huh? So under the standardized approach, bank assign risk weight based on ratings from RBI eligible external credit rating agencies, primarily for the corporate exposures. True. RBI approved domestic credit rating agencies, including CARE, CRISIL, ICRA, India Ratings, Equate, and Informatics since June. True. Internal rating based approach, IRB approach, allow bank to use internal assessment, probability of default, loss given data, exposure at default, and maturity to calculate the capital requirements आपका ठीक है. So this is also seems correct. ठीक है. In the foundation approach, it is about the internal race based approach. ठीक है. In foundation approach, probability of bank provide probability of default true. ठीक है. LGD and EAD by the RBI or the supervisor. ठीक है. While the supervisor provide this can be by bank and supervisor both. ठीक है. Bank and supervisor both आपका. ठीक है. This is wrong. ठीक है. Under the standardized approach, all banks assign uniform risk weight to borrowers with a same external rating, whereas under the IRB approach, risk weight may vary across bank for the same borrower's rating. True. So 1, 2, 3, 5. 1, 2, 3, 5 means option A should be right answer for this particular one. Okay? And please do remember these one. Very, very important statement. Huh? Okay? And why no one answer this particular question? Why so, guys? ये तो बनना चाहिए था ना सबसे. Just a minute. I can't see your chat. हाँ. So A will be right answer. Okay. हाँ. Rukmani ma'am give answer for this one only. Not C आपका. A should be right answer for this one. ठीक है. So this is something like in internal risk. IRB approach and foundation IRB. ठीक है. So in case of IRB approach, these 4 key parameters by the bank itself. But in case of foundation approach, probability of default is decided by the bank, but supervisor provide loss given data and EAD. Maturity can be provided by the bank or the supervisor. That is the only distinction between these two. Okay, next one. Which of the following statement are correct with respect to comprehensive approach and risk mitigation techniques under RBI Basel III frameworks? Comprehensive approach and credit risk mitigation techniques under RBI's Basel III frameworks. What will be your right answer, guys? So under the comprehensive approach, haircut are applies to both the exposure and the collaterals to account for market volatility, the exposure amount is adjusted upward while the collateral value is adjusted downward unless either side in cash आपका, ठीक है. The first statement is 100% true, ठीक है. When the exposure and collaterals are in different currencies, a standard supervisory haircut of 8% applies, 100% true, to the collaterals of the account currency as per the RBI Basel III, ठीक है. On balance sheet netting, a bank may apply haircut to both loan and deposit irrespective of, no, not irrespective of currency. We have with respective of currency, that is not work in this case. So 1 and 2 should be right answer for this one. A should be right answer for this one. In on balance sheet netting, haircut are zero except when the currency mismatch. Also, such netting require legal enforceable agreements and apply only to loan and advances exposures and deposit collaterals. That's why A is the right answer for this one. Next one. Okay, so based on this particular scenario, analyze the following statement and identify the correct one. So first, go through the statements. ABC Bank Limited, a scheduled commercial bank in India, maintain an active trading book and also hold significant foreign currency positions. On 31st March 25, the bank portfolio include government securities held for trading STF, it is known as STF, HFT, sorry, HFT held for trading 200 crores M2M daily आपका, first one. Second one is your corporate bonds classified under available for sale AFS 150 crores. Gold open position equivalents to 75 crores. Currency derivatives hedging for hedging purpose. Net exposure M2M 25 crores. Unpaid matured debentures worth 30 crores. Overdue by 45 days. A repo transaction undertaken with GSEC government securities as a collateral with the counterparty defaulting on the settlement obligations 90 plus days. The bank use a modified duration approach for computing capital charge. So based on the above scenario, analyze the following statement and identify the correct statements. Okay, so what will be a correct answer? So capital charge for market risk must be maintained daily for position 1 to 4. आपका 1 to 4 means these position, ठीक है. Corporate held to for tradings, ठीक है. HFT 200 crores, okay, M2M. Corporate bonds, this gold open position and currency derivative 100% true, ठीक है. Statement 1 is correct, ठीक है. Position 5 would attract capital charge for credit risk, not for market risk. Unpaid mature debenture worth 30 crores, overdue by 45 days. So position 5 attract capital only for the credit, not for the market. आपका, what do you say about this statement, guys? Statement 2 is also seems correct. Yeah, this is also correct. 3 आपका. Next one. Position 6 आपका, position 6 means this is all, position 6 आपका, a repo transaction undertaken with government securities as collateral. So position 6 must be treated as NPA. It is 90 plus days, okay. And appropriate credit risk weight asset applied instead of market risk capital. This is also correct here. Bank in India are required to use internal risk model to calculate capital charge as per the latest RBI guidelines. This statement is wrong. So we have standardized duration approach. We have to use the standardized duration approach. This is wrong. As per the regulation, only derivatives and central government securities are allowed to be held short for capital charge computation. This is also correct. So 1, 2, 3, 5. 1, 2, 3, 5. 1, 2, 3, 5. B आपका must be right answer for this one. Yes, रुक्मिणी मैम बहुत बढ़िया, awesome. ठीक है. So option B must be right answer for this one. We use standardized approach. Rest all seems correct. All these are the correct. So Indian banks are required to follow standardized duration methods. Internal models are not yet adopted due to maturity constraint and all. Okay, that is the explanation to this particular one. Next one, guys. Next one. which of the following statement related to computation of capital charge for general market and market risk under the trading books? ठीक है. So capital charge for market risk, simply saying, ठीक है. What will be your correct answer? So capital charge include a net position components, vertical and horizontal disallowances, and component for options where applicable. पहला statement क्या कहते हो आप लोग? सही है, 100% correct है, ठीक है. Yes, first statement is 100% true. The currencies with less than 5% of overall foreign exchange turnover, bank may aggregate net long and short-term position with each time band to arrive at gross position. Each time band means आपका vertical and horizontal. This is also correct. Vertical allowances account for the basis risk due to imperfect interest rate alignments between assets and liabilities in the same maturity bands. Horizontal disallowances apply to netted positions with a single time band and range from 5 to 100%. This statement 4 is doubtful. It should be wrong basically. Basically, we apply the horizontal time bands, not the single one. It should be across the time bands. ठीक है, सारे उसमें यूज होना चाहिए. I'll not go with this one. Short position in derivative help mitigate interest rate risk and reduce the capital charge due to algebraic netting. This is true. 1 2 3 5 1 2 3 5 1 2 3 5. Again आपका option D should be right answer for this one. ठीक है. So horizontal disallowances apply across time bands, not within the single time band stream, and a range of 30 to 100%, not 5 to not the 5% also. So these were the two correct statements around this particular one. Okay, next one. Okay, so which of the following statement are correct regarding the capital charge for operational risk and the applicable frameworks? Very important. These questions are very important, guys. Please do revise these particular one. Go through the explanation आपका once twice thrice, ठीक है, and you have to be very familiar around these one. ठीक है, तो थोड़ा सा इनको बहुत अच्छे से देखिएगा आप लोग. ठीक है, डेफिनेटली ये आपको हेल्प करेंगे आने वाले एग्जामिनेशन के अंदर. So a scheduled commercial bank, Y Bank Limited, has been operating in India with significant exposure to operational risk, including frequent cyber incidents and complex outsourcing arrangements. The bank reported the following data. Financial year 2022, net profit 140 crores, provision and contingencies 30 crores, operating expense आपका schedule 16, which is आपका 80 crores, other than other item to be excluded 50 crores. 2023 net profit, which is actually loss आपका, ठीक है, this is a loss here, ठीक है, provision and contingencies 10, operating expense 100 crores, exclusions आपका 25 crores. 2024 125 crore rupees profit, provision 25 crores, operating आपका expense 75 crores and exclusions 40 crores. The bank currently follow a basic indicator approach, BIA, to compute the capital charge for the operational risk. Management is considering a transition to more advanced method, but is unclear about the criteria and supervisory expectations. Which of the following statement is correct regarding the capital charge for operational risk and applicable frameworks? So what will be your right answer, guys? क्या होगा दोस्तों correct answer इसका? So gross income for financial year 2023 should be included in the computation of gross income under BIA, since provision and expenses are positive. No, ये आपका गलत है, because we are in loss during this particular period. This is the loss period for the bank Y Bank Limited, so we'll not include this one. Capital charge under BIA should be calculated using आपका 50. Basically we use इंडस्ट्री बेस ना आपका 12%, 15 बिजनेस लाइन बेसिस आपका, ठीक है, 12%, 15% and 18% आपका बकेट. ठीक है, सो इन दिस पर्टिकुलर केस we have alpha 15% apply to the average eligible gross incomes over the last 3 years आपका, ठीक है, this is 100% correct आपका, ठीक है, there is no issue with this statement 3 आपका, ठीक है. So the next one is as per the BIA, gross income include operating gross income from the business line, operating expenses, but exclude the profit from sale of held to maturity investment. This is also correct. Under the advanced measurement approach, bank must use internal loss data, external loss data, scenario analysis, and business environment factors to compute the charges. True, आपका AMA it will be required. Transitioning from आपका BIA to AMA require compliance with BCBS, sound practices, 11 principle, a minimum of 5 years of loss data, true, and integration of this management in day-to-day operation, again true आपका, ठीक है. So 2, 3, 4, 5, 2, 3, 4, 5. हाँ, again आपका option D should be right answer for this particular one. क्या कहते हो guys? ठीक है. D should be right answer for this one. Correct है? Yes. So हाँ, so statement one, there is one, I hope you guys remember, अगर आप लोगों ने concept class देखा होगा ना, तो I have provided you BIA के अंदर we have 8, like we as per the BCBS classification we have 8 core business line, and for this one we have basically in BIA approach what we generally do, your gross income, then we have आपका beta factors, ठीक है, for the 12%, 8% risk wise आपका, ठीक है, 12%, 15% and 18%, right? So that we generally compute with this one. So in this particular one, BIA use average gross income excluding negative years आपका, ठीक है, this is the part. So 2023 was the negative years, so that's why we excluded that particular one over the 3 years multiplied by the आपका beta factors 15s. This is आपका statement 3 correct, and this is again very important. Advanced measurement approach required sophisticated internal system using multiple data input including internal external losses, scenario analysis, business environment factors and all, okay? And AMA bank must meet stated conditions such as conceptually sound ORM, operational risk management, minimum 5 year of loss data, and integration into operational processes and as per the BCBS guidelines आपका, ठीक है. So that is the one, ठीक है. Yogesh sir very late, huh? You are very late, or you joining very late? It's a morning for you or it's a evening for you? What should I wish you? ठीक है, चलो बताओ. Next one guys, next question. Please go through these particular question again and again because they are very important. We have discussed all capital charge for market risk, credit risk and operational risk. Next question guys, next question. Pillar 2 supervisory review process, ठीक है. So we have 3 pillars. Minimum capital requirement pillar 1, pillar 2 supervisory review process, and pillar 3 is market discipline, ठीक है. तो आपका supervisory review process, SRP process, SRP is something आपका जहां पे we have 4 principle, and this question is around the, no it is not around the principles आपका, ठीक है. चलो बताओ क्या होगा आंसर. Internal capital adequacy assessment process, ICAAP, required bank to assess their capital requirements only for the risk explicitly covered under pillar 1 such as credit, market and operational risk, ठीक है. पहला statement आपका ये है. Okay, Chris is saying option B आपका, ठीक है. 1, 2, 4. Okay, option 1 is itself looking wrong आपका, हाँ. Option 1 is I'm doubtful about this one. Statement 1 आपका. When it comes to ICAAP ना, it generally include risk apart from these आपका, ठीक है. When it comes to ICAAP, it include मतलब basically the inclusion of risk which is beyond the credit, market or operational risk. Apart from that, if there is something risk that we generally cover through this particular one. So that's why I'm this statement should be wrong. I'll not go with this statement 1 आपका, ठीक है. चलो Chris sir, you have to think again. Assume that this statement is wrong. Now, what will be your correct answer? So SRP supervisory review process under pillar 2 emphasizes both the adequacy of internal capital and robustness of risk management techniques including risk not fully captured under the pillar 1. True. Strategic risk, reputation risk, and model risk are example of the risk that may warrant additional capital under the ICAAPC. This is now you can build a relation also between these two. Correct here. The financial crisis 7-8 underscored the irrelevance of internal risk management. No, relevance of internal risk management. ICAAP submission include interactions with RBI and may include intervention by RBI to either reduce exposure or restore capital depending on the bank profile. True. So 235 means option A should be right answer for this particular one. Yes, okay. Okay, so option A should be right answer. Lots many people suffering from fever. What happened, guys? It's raining in Bangalore. ठीक है, अभी बारिश हो रही है यहाँ पे बेंगलुरु के अंदर. ठीक है, मैं कपड़े बाहर रखे हुए थे. That's why I went out. So it's a very pleasant weather. But you have to take care यार. एग्जाम वाले ड्यूरेशन के अंदर ना आप बीमार हो सकते हैं ना मैं बीमार हो सकता हूँ. ठीक है, we both have the same conditions. So we have to take care about ourselves also, guys. Please do take care. ठीक है. तो गई सर अभी देखो लास्ट पेपर आई गेस यू स्कोर 47 और 49 इफ आई एम करेक्ट. आप कितने थे? 47 थे ना आपका ABM के अंदर. सो यू हैव टू स्कोर वेल इन BFM. इफ यू स्कोर वेल इन BFM, ABFM विल मैनेज, बट HRM एंड BRBL आर बैक टू बैक. तो थोड़ा सा आपका बढ़िया से वहां पे मचाना है. ठीक है, चलो नेक्स्ट वन. विच ऑफ द फॉलोइंग स्टेटमेंट अबाउट लिवरेज रेशियो अंडर Basel III and RBI guidelines are correct? चलो बताओ. This is easy question. What will be your correct answer? हाँ 49 ना. हाँ yes. So you have to score well in this BFM. At least target 60 plus in BFM. So if you target 60 plus, if will require some marks in other paper also ना. So that balancing out is very necessary. वो बहुत जरूरी है हमारे लिए. चलो, so what will be a correct answer? Leverage ratio is a risk based capital measure used to assess bank financial. It is not a risk based आपका. ठीक है, first of all. ठीक है, it is when it comes to आपका leverage ratio, it is generally categorized as non risk based आपका. ठीक है, so statement 1 is wrong. Minimum tier 1 leverage ratio is set by Basel committee is not 5%. It is how much? 3%. The leverage ratio is defined as capital measure divided by exposure. आपका capital divided by the exposure. बिल्कुल correct है. ठीक है, express in percentage into 100 means. ठीक है, RBI has relaxed the leverage ratio to 4% for domestically systematically important banks in India. True. ठीक है, the leverage ratio help prevent excessive build up of leverage and destabilizing the deleveraging process in the banking sector. RBI help with हाँ बिल्कुल सही. ठीक है, so 345 B should be right answer for this one. ठीक है, so it is आपका at 3% and it is आपका based on the non risk based capital measure. It is generally categorized as the non risk based capital measure. ठीक है, why people are not answering? चलो आगे बढ़ते हैं. Next question, guys. Next question on your screen. Quickly go through this particular one. So which of the following statement about domestic systematically important bank D-SIB as per RBI framework are correct? This is last time there was one case study around D-SIB also, and there is one update about the D-SIB. D-SIB के ऊपर we have one update also. ठीक है, so that D-SIB update is very important. You have to careful around that particular one also. ठीक है, now SBI which generally gets shifted to bucket 4 and SDFC to bucket 2 and ICICI remain with the bucket 1. ठीक है, so that is again that information from with effective from 1st April 25. So they can, if they give you case study similar to LRS things and all, you have to consider that. So RBI methodology of identifying D-SIB is based on BCBS framework for global systematically important bank with modification for the domestic context. आपका 100% छूट. ठीक है, the traditional commit that the additional CET1 capital charge for bucket 5 is नो इट इज फॉर आपका पॉइंट 2 इज बकेट 1, इट इज आपका कितना 1%, ठीक है। बकेट 5 वी हैव 5 बकेट एंड इट इज द अपेक्स वन, 1 2 3 4 5, तो 1 आपका पॉइंट 2, 2 इज पॉइंट 4, 3 इज पॉइंट 6, देन आपका 4 इज पॉइंट 8 एंड देन आपका 5 इज पॉइंट 1% 100 बेसिस, ठीक है। सो इट इज रॉन्ग आपका। State Bank of India is classified a higher bucket than the ICICI and SDFC, thus requiring higher additional CET. आपका true. Now this statement is still correct. ये अभी भी सही है, but you have to remember this particular one. Now SBI, please correct me if I'm wrong. It is आपका 0.80 which is bucket 4, ठीक है, and SDFC it is bucket 3, bucket 3 और 2 आपका, ठीक है, बकेट 3 आई गेस, ठीक है, 0.60 एंड ICICI आपका बकेट 2 विच इज 0.40 और समथिंग। प्लीज डू चेक दिस पर्टिकुलर वन, हाँ, विद इफेक्टिव फ्रॉम 1st April 2025। अर्लियर SBI वाज हियर एंड SDFC एंड ICICI वाज इन सेम बकेट, ठीक है। तो ये थोड़ा सा आपका जो चेंजेस है जिसको आपको थोड़ा सा ध्यान रखना होगा, ठीक है। why only one is correct, Chris sir, why only one is correct? See, this is correct, this is correct, 1 in 3, 1 in 3 means आपका B will be right answer, ठीक है। This statement, SBI is classified in a higher bucket than the ICICI and SDFC, this is true ना, thus they have to require additional one, ठीक है। It is basically when it comes to the D-SIB concept, these are too big to fall and they have to maintain additional capital, ठीक है। This new change I have डिस्कस विद दी कॉन्सेप्ट द रीसेंट कॉन्सेप्ट क्लासेस ऑल्सो, ठीक है, तो वहां पे हमने इसको आपका डिस्कस किया था, ठीक है। सो दैट इज जनरली कम्स अंडर दिस वन। हाँ, इफ इट विल कम टू, ओके जस्ट अ मिनट, आई जस्ट क्रॉस चेक दिस वन, ठीक है। हाँ, ICICI इन बकेट 1, SDFC इन बकेट 2, यस, हाँ बिल्कुल करेक्ट है, ठीक है। सो ICICI इन बकेट 1 मीन्स 0.2 एंड SDFC आपका 0.4 एंड SBI आपका बकेट 4, दैट मीन्स आपका 0.80. So they have to maintain this additional capital from beyond that particular one, correct है? It can, so not necessarily they can ask this particular question in the recent examination also, because this is a kind of a static things, there is आपका यहाँ पे कोई बड़ा आपका वो नहीं है, ठीक है, so they can ask in this particular one also, right?